Hello traders, and welcome back to Trading with Bill, Options and Forex on a Monday, July 14th, 2014. Hello and welcome to another trading week. Traders, great to be with you, coming to you live from Pattaya, Thailand. Cloudy skies, rough waters, and dark beaches. No sun today, traders. We'll be in the office. Plenty of sunshine here. All right, traders, great to be with you. Let's get the risk disclaimer out of the way, and we got to move on. We've got about, oh my gosh, I think we got like 14 slides today, so let's get moving. Okay, this is a risk disclaimer. Forex and options trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the options and Forex markets. Do not trade with money you cannot afford to lose. Traders, please remember that past performance of any trading system or methodology is not indicative of future results. All right, that's our risk disclaimer, traders. Let me introduce myself to you. My name is William Gilday, and they call me Bill. Traders, I started trading in 2006. In 2008, I retired from a wonderful career in the fire rescue department out of the great state of Florida. Traders, 9 days later, got on a big airplane, came over to Thailand for a 3-month holiday. Traders, it's 2014, and I'm still here. I made one good decision. I packed my 3 laptops and was able to trade even on a holiday, and I'm still here. Traders, retirement in Thailand is absolutely awesome. I'm having a great time, but more than that, I love trading the Forex and options market every single trading day. I am in it, looking at charts, looking at fundamentals, looking at opportunities to make profit. And more than anything, I like educating and I like providing these videos to you every single trading day. Okay, 99% of the time. All right, traders, let's get moving. We got a lot to talk about today, and it's Monday, weekly options preview. I did some homework over the weekend, and we looked at 3 or 4 option stocks and ETFs that we can look in for our weekly option trades this week, and we are looking to get into one. So let's get to the first one, and this is the SPX. This is the SPX, and it's basically the ETF of the spiders. So we're going to look to take this, and we are basically looking at a 1945, 1940, and this is going to be a bull put. So what we're doing here is we are going to put the bull put on, and as long as we stay below 1945, if we hold on to this trade, if we get into it today, we hold on to it until Friday, and it stays below 1945, we will be in profit. Now, one contract is going to make $48 in profit. So depending on your risk tolerance and your account size, depends on how much you want to put as far as contracts onto this trade. But it is bullish. And if you take a look at 1945, where that short gray line is, it's below support from the previous almost 2 weeks. So this looks pretty good to me, and this is a 20 delta, and we're going to do it. Traders, if you take a look on the bottom of the chart, you'll see I have my DNA, market DNA indicator, and stand by. We're going to review that with you in just a couple of slides. Okay, let's go take a look at one of my favorites, and this is the IWM. Not sure what we're going to do with this IWM. This has made a pretty decent drop last week. As you remember, now it's almost 3 weeks ago, we were in this to the long side, but now you can see where it dropped off. So I am not looking to see, I am looking to see what we're going to do with this. We're going to see if we get a bullish entry here, and I surely want to get above that solid gray line, which is the 50 exponential moving average. And maybe we can, do this again. So we'll take a look later on. Probably won't even think about entering this until Tuesday. We'll see how the markets open on Monday. Okay, let's go take a look at another one. Here's the Russell, and this is another one that now it's below that 50 again, and don't know what's going on. I don't know if this was just a fib of that large swing from the 200 exponential moving average, and we're going to bounce and then continue the motion to the upside. We know all these markets are bullish, So we're going to have to take a look at that. Take a look at the bottom of the chart at our DNA, and that blue line is hooked to the upside. So taking a look to maybe get in this, but we'll have to see how today holds out. Again, I'm probably looking for Tuesday before entering this trade. All right. I thought I would throw in just a regular stock, and this is Apple. And you can see Apple has been sideways. And however, you know, the high is like 96, is that 96.80. So, you know, I'm still bullish in this, but I'd like to see a retrace and then take this back up. The dotted gray line is a 21 exponential moving average. And I wouldn't mind tapping into that for a second and come back down to that area, and then we can get into a vertical spread there. But right at the moment, not going to do anything with Apple. We're going to hang tight on this one, see what happens. But I do like doing options on Apple. All right, traders, as promised, let's talk about the market DNA indicator. This is the indicator that you see on the bottom of my charts. And let me bring it over to you. Here we go. This is the market DNA. This is very easy to read. There's just a couple of things you need to understand about this. However, let's take a look at the dark blue line and the light blue line. All right, so this is buying pressure. The dark blue line is buying pressure. The light blue line is proprietary. The man's name is Dave, who made this indicator, where he puts a bunch of other calculations in to the indicator. And what you want to see here is, got to make this simple, you want the dark blue line and the light blue line not to have any angle and separation. You want them to be close together, all right? So now you understand what the blue line is. Let's take a look at the bright yellow line. The bright yellow line is selling pressure, and the gray line is just like the light blue. It's just other calculations to support that. And again, we want no angle and separations between the bright yellow line and that gray line. You want them together. The red line in the center of the indicator is the 50% line. So now you can see that buying pressure is now above the 50% line. So if you were looking at a possible trade to the upside, you basically have on the market DNA a confirmation that this could continue to the upside. Now, if you take a look, you might have taken this from the 0.2, right? You see it bounce there a couple of times, saw that hook up, and you might have taken that, and that's fine. Remember, 0 and 1 are the maximums on this market DNA indicator. If you get to 0 or 1, you've come to the max on this. Dave says he likes the hourly chart or the 2-hour chart the best to use market DNA. I have to tell you, I've been using market DNA for over a year now, probably 2 years, and I use it on the daily, and I've had no problems with it. It's given me correct signals, and it's a very nice tool. So, if this is up, right, you just want to watch it. If the blue line is above the 50, or if it's at 0 and gives you a hook to the upside, you know, that with technical analysis and, you know, what's going on, support and resistance, you can really get into this at a nice level and take this to the upside. If it's going down and you see that yellow line is pushing on up, that's selling pressure, and that's telling you that, you know, we're looking to short this. And of course, if it breaks that 50%, right, it's selling it out. It's really going to go short pretty quick. Alrighty? So what I do is I basically use the blue line. I'm basically looking to see when it's bullish, when it's above that 50%, and when it hooks. The selling pressure is going to be the opposite of the buying pressure of the blue line. So I just look at one, and if it's doing the opposite, I know that. So very easy indicator to read, very helpful. If you are using the Thinkorswim platform, get in contact with me and I will send you the installation video and the things to enter into your Thinkorswim platform so you can have this indicator on your charts. All right, I hope that helped you a little bit and understand the DNA indicator, the market DNA indicator, and the best of luck. Okay, traders, let's move on. It's time for Forex charts. All right, so what's going on in Forex? Forex is we're going to take a look at, as we do on every Monday, the euro dollar and the pound dollar. Let's take a peek. Okay, here's the euro dollar. The euro dollar is staying below that 200 exponential moving average, which we like. We're only looking for sell trades in the euro dollar. I want to sell the euro. I do not want to go long in this pair. Look at this daily chart. It is to the bearish side. Okay, let's take a look at a 16-minute chart. Here we go. You can see the rectangle with the entry zone. You can see above the entry zone, you can see to the right, you see the red diamond. You see the red arrow indicating we want to go short. And we just want to take this to the downside. We're waiting for a bullish candlestick formation right now to take this short within our entry zone. So let it come up to one of those fib levels, give us a bearish candlestick formation, and we can short this. We're looking to come down to that S1 on the bottom of the chart there. You can see where S1 is. That is equal to the last low. If you take a look all the way over, you can see that's the low, and we're looking to get out just before that. This is a nice trade setup. It's probably not going to happen till we are absolutely in the London market, and maybe after London lunch, starting of New York, for this to work out. However, let's take a look at the 15-minute chart, see if we got something a little bit quicker. Don't think so. You can see there's our entry zone again, and we are looking for a bearish candlestick formation. We're at the sweet spot, so we want to take this to the downside. Our stop is below the daily pivot point, the 200 exponential moving average, which is a green line, and we have a deviation level all at the same place. That is some nice confluence there. Take a look at the Williams R% indicator on the bottom of the chart. That is absolutely gorgeous to the downside. So we want to take this bearish, and this 15-minute chart is looking sweet. All right, let's take a look at the three charts put together. You know, I love to do this. I love to have my three charts put together so I can take a quick glance at what's going on and see where I'm at. It's just nice to do. Traders, just to remind you, this is the Ninja Trader platform. I strongly suggest you take a look at it if you are interested in trading on the Ninja Trader platform. They are in cooperation with over 100 brokers, so it's a good chance that you can trade right off your Ninja Trader charts. All right, let's go over to the pound dollar. Look at this pound dollar. It's bullish, right? We all agree this is a bullish pair, and we just want to take this to the upside. However, the last 2 weeks or so, it's been in a sideways price action. And the biggest thing that caught my eye on this, when you look at this spatially, is all those candles that are sideways, except for like two, are all what? Indecision candles. They're all indecision candles. I'm not sure what this is going to do. This might, you can see the powder blue line on the bottom is a support line, and that swing to the upside, it might come back down, fib that, and then continue up. However, as of right now, I am bullish, and my bias is to go to the long side. Okay, let's take a look at the 60-minute chart. Here's a 60-minute chart, and basically, very simple trade plan here. We're looking for a close above the 200 exponential moving average. You can see where my green arrow is, and that is also above the daily pivot point. Let's get a close above that price area, and we can take this baby up, and you can see where the powdered blue line is there, dot, the powdered blue dot, and that's where our take profit's going to be. And that looks good. That's basically between R1 and R2. We want to get out of there. But this looks like a nice trade. Lots of pips there. So it should be sweet if it works out. Traders, let's go over to the 15-minute chart. Again, simple trade setup. I don't know if it's going to work, though. Again, we need to come above that 200 exponential moving average. Again, the daily pivot point's right there. And we want to get above that bullish candlestick formation, and let's go long. You can see where the powder blue dot is up top on the chart. That's where our take profit area is. And you can see where the diamond is, the red diamond on the bottom, and that is where support is. And basically, that's a deviation settlement level. So that's where our stop's going to be. If we get down to there, traders, we're just not right on this trade. I would never let it get down that far, but that is the maximum where you want to get down. Alrighty. And yes, the news guy is jabbing away in the background, as usual. He always comes on when I'm talking. All right. This is the three shot. Look at this, nice bullish. Everything's put out to you straight out, straightforward, ready to go. Those are what we do every Monday. The euro dollar, the pound dollar. Got some options. I'm really excited. I hope to get in 2 or 3 this week. You know, for the last 2 weeks, I have not been in any daily options, so we're looking to get in these daily options this week for sure. All right. here we go. All right, traders, thank you so much. My name is William Gilday, and they call me Bill. And I just want to thank you, my friends, for being with me. Have a great trading day, and I'm looking forward to talking to you tomorrow, sometime before New York. Traders, have a great trading day, and we'll see you later. Take care now. Bye-bye.